Well, at a time like this, we've got a new fund, which is a new scheme, a new fund which has been launched by Motilal Oswal Asset Management Company. Interestingly, the fund is not a play on Indian stocks, but a play on US stocks. The fund essentially is a passive fund, a ETF on the S&P 500. We have Pratik Oswal, head of passive funds at Motilal Oswal Asset Management Company, and he is joining us right now on the show. Pratik, it's a pleasure to have you with us here. Prashant this side, appreciate your time very much here. Could you first tell us, I guess the logic is pretty simple. I mean, the US markets were doing phenomenally well before this last episode of COVID-induced correction that global markets saw, and I'm assuming that you're starting to see, you expect that market to pull back the fastest and remain the strongest.
Yeah, so thank you, Prashant. So in terms of the COVID impact, I think what we've seen is that especially the US stocks and especially the US index, looking at the NASDAQ or the S&P, there has been some level of pullback on the back of, I think, stimulus that's been given by the government. And I think also there's, I would say they've decided to keep the economy open, and I think the stock markets have reacted well to that. But in terms of the fund, honestly, this fund wasn't, the fund's design is to actually, is to be a part of a customer's asset allocation in terms of international investing. So for example, international investing is a very new phenomena for investors here. But having had experience working in multiple geographies, it is actually very common in other parts of the world. So hopefully, we can push investors to diversify their portfolio, from only having Indian equities to having a lot more in that.
Pratik, just some basic details. How do Indian investors purchase this ETF? I mean, if they want to, this units in the scheme?
Yes, yeah. So basically, this is actually not an ETF. This is not a feeder fund.
Okay.
This is actually a very simple index fund. So this is, I would say, comparable to like a Nifty 50 index fund, where instead of the 50 stocks that you'll have in the Nifty, you would actually have the top 500 companies in the US. So what we've learned is that ETFs may not be the best customer-centric instrument, because the liquidity on the exchange for the ETFs today have been quite poor. So, and I think customers have responded in a much better way towards simpler products such as index funds. In terms of the fund itself, so I think the S&P 500 was actually the world's first passive fund, ever launched, and this was way back in 1975. So the index has its origins in the 1930s, and I think not only has this index survived but also thrived. Today this index is actually the world's largest index fund. So if you look at the top 3 out of 4 mutual funds today, the 3 out of them, 3 would be S&P 500 index fund. So it's very significant and a very iconic index to own.
Hi Pratik, good afternoon, and congratulations on launching the index fund, primarily because it'll bring down costs now for investors who are looking to invest overseas, and congratulations also for the speed between ideation and execution of this fund. Now, one concern remains for Indian investors, which is that the rupee has depreciated so much, right, over the last few days and weeks. Does it make sense for Indian investors to be putting in money right now into the US market, given that globally equity itself may see another downturn, and also because of the currency risk?
Yeah, so this fund offers 2 opportunities. The first opportunity is to buy some of the world's best brands, so best businesses. So you're basically buying the top companies in the US. And the second opportunity is the fact that this product offers you an asset class such as dollar. And dollar is a very important asset, in the sense that, if you think about it, 10 years ago, the dollar used to be at 40, 45. Today, it's at close to 75, 80. So for any US investor who had invested in India 10 years ago, is not really happy with what sort of returns he's had because of how the dollar has behaved. For an Indian investor, this has been exactly the opposite. So I think the idea here is to, and as you know, today a lot of our expenditure is happening in dollar, So for this, in my case, I went to school in the US. If I went to the same school, I got the same degree, it would cost me maybe 2.5, 3 times the amount I paid, say 10 years ago. And also today, the reason why, I think, we are making a lot more foreign trips. We're sending our kids abroad. We are buying a lot more international products. So I think the point of this fund is to make sure that whatever goals you're having, it needs to be in the same currency of your expenditure. Number one. Number two, I think, as you talked about volatility in the global markets today, so I think one of the main reasons to why investors should be looking at international investing is because how different it moves vis-a-vis Indian equity, So just to give you an example, today most Indian investors, look at diversifying using, 5 or 6 different mutual funds. But if you see in the last 2 or 3 months, most investors would have lost 20-30% regardless of what fund they bought. So the idea here is that the correlation of an Indian, say, average mutual fund would be 80 to 90%. In this fund, or most international funds have a lot lower. So for the S&P 500, the correlation will be around 15%, which I think is historically low. And so the benefits of the fund is actually felt when it's a part of your asset allocation. So overall, what investors can expect is to lower the volatility of their portfolio, and it also gives them some sort of downside protection and moves them away from the India market risk that we have.
Okay, I take your point, Pratik. Secondly, what will be the division between equity and debt? And overall in a person's portfolio, what is the allocation that you would advise to an index fund abroad?
So you mean to say this specific index fund, or just general allocation abroad?
No, say if somebody was to invest in your S&P 500 index fund, what sort of allocation should they have within their portfolio to, say, international funds? If somebody may already be having one of the feeder funds or actively managed funds, therefore should they add this on? Does it serve much purpose? And what should be the overall allocation? Should it be 10% or more given the current environment?
Got it. Yeah. So basically, in terms of asset allocation, so we are pushing investors. We are advising investors to have a minimum of 10 to 15 allocation towards global investing. That is what, and I think if you look at just the way say Americans invest, they, I would say, invest anything between 20 to, I would say, 40% in global equities. And so I think 10 to 15% is something that I really recommend. It should be part of your long-term portfolio. And the thing about an index fund is that you won't really underperform the benchmark anytime. So because it tracks a specific index, so there's not really a need for anyone to sort of churn this, buy this, sell that, all that. So I think investors can assume that they can for a very long time in their portfolios.
Pratik, just one last point. Actually, really only a point, and this is on a lighter note. Active fund manager like Motilal Oswal, and if there are, a fund house identified with for research and really looking at companies to invest, etc., and very active way is Motilal Oswal. So Motilal Oswal launching a passive fund, that too based on the S&P 500. What does it say about the fund house's view as far as the Indian stock market is concerned?
Yeah, no. So I think the idea here is that so as manufacturer of an AMC, our at least my role is to provide building blocks so that advisors can use the products to do asset allocation for their customers. And increasingly, my view is that international investing should be a very important part of people's portfolios. We as a fund house, our core strength is in stock picking, but that limits to India as a country. I feel like already India, I think stock picking is extremely difficult. When you go abroad, it becomes even harder. So I think any investor looking to go to a fund abroad, should be. I think it's a much simpler process of just buying the index, because there's no bias when it comes to or risk associated with any returns or any long term.
Okay, got it. Thanks very much. Appreciate you joining in, Pratik. And by the way, even before, good luck with the fund. Even before this entire correction began, there were lots of there were lots of platforms offering one to invest overseas. in feeder funds, etc. And that was basically based on returns in 2019 and 2018. So the US market was, a huge outperformer as compared to other markets. So interest was really bubbling, and then of course this entire episode interrupted that process. But I think it's back again as we now are. We kind of have a sense of the COVID impact. The markets have corrected and things are settling down. That feeling that maybe the market to come out the strongest and the fastest is going to be the US, and that probably reflects what you're doing as well. Of course, offering a way to invest for people who may want to. Thank you very much, Pratik, for joining us and running us through that. The market is up 101 points. So